Hello, 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 friends. Happy Tuesday to you instead of a Monday. We were traveling back from our President's Club celebrations in Hawaii yesterday. Let me share that slide with you. Had a great time. There's my wife, Nakisa, and so up on stage accepting the award. A sincere thank you to all of you on this video who refer us, who tell your friends about us, who make this level of success year after year possible and plausible for me to achieve. So thank you very much from the bottom of my heart. All right, what's going on? Let's jump into it. Tariffs again are at center stage here, and so yesterday we knew that the tariffs were coming. Today the tariffs have actually happened. On Wednesday we have an ADP employment report. That's going to be the precursor to Friday's BLS jobs report. So what do I expect? Well, the future of mortgage-backed securities I expect will come from whatever's happening on Friday. So we have to watch that very, very careful. Let me tell you what's going on with the tariffs and the trade wars, and then we'll jump into what the market's doing. Okay, so as of 12 o'clock last night, Trump hit Canada and Mexico and China again. This time it's a 25% tariff on most important goods from Canada and Mexico. Canadian oil, crude oil, gets a break and only has it at 10%. Canada did fire back this morning $100 billion of tariffs on U.S. goods that they import. So that's going to have its own ramifications on us. Tariffs on China doubled. They went from an original 10% to another 10%, so 20, and we haven't seen that retaliation yet. We have not also seen the retaliation from Mexico as of yet. Stock market this morning dropped down about 700 points last time I checked. Inflation concerns are rising. Most analysts in our industry think that we're going to have a CPI rising up, the consumer price index inflation rise up by about 1%. Again, lots of reactions this morning. Not sure exactly where it's going to land. The one thing that we can all agree on is that these tariffs are going to be inflationary regardless, because as you guys all know by watching this channel, it is in these countries that will take on and pay for all of those additional tariffs. It is us as the users of those goods and services that will pay those tariffs. Okay, so there's that. What's happening with the bond market? Well, it was on a nice little tear as of the last few trading sessions, as you can see here, very nicely going up. Rates are improving for sure. A lot of that was happening basically because of the fact that the stock market was afraid of what was going to happen with these tariffs, and the stocks were losing, and the bond market, the mortgage-backed securities specifically, were the recipient of that money. It's called a flight to safety. And so when the money flies out from the stocks, it goes into a safety of treasuries, and that's why we're seeing what we're seeing. Now, mortgage-backed securities do look severely overbought at this point. So it's just a matter of time of a reversal. A couple of technical perspective. If we can break through this level of resistance right here and close above that, that signals magnificent, wonderful things for mortgage rates. Hopefully we can make that happen. As you can see here, technically speaking, this wick has gone up and has retreated back down. So it'll be interesting to see what happens and what news will not push this through. Definitely subscribe to our Instagram page so you can get daily updates on our stories about what's happening with rates if you are concerned and want to know on a daily basis what's going on, as many of you do. All right. This says this week at 218. That's incorrect. It should be 34. Great. Average mortgage rate 6.64 across the country. 30-year jumbos are down 6.95. This is heading in the right direction, which is wonderful. And so it'll be really important for us to watch what happens this week, watch the retaliations of the others. And as we talked about back here, really at the end of the day, these two reports, the ADP employment report on Wednesday, that's going to be a hot spot and a precursor of what's going to happen on BLS. But the BLS has been so incredibly, uh, what do we call it, to be nice to it? It's been unpredictable for the last year or so. So we just don't know what we don't know. We don't know what kind of seasonal adjustments they do. But if that report comes in hot, showing employment is strong, all of this will be for naught stock market will rally again, bond market will lose rates, and rates will increase. So it's going to be an interesting week to watch this very closely for you, which is exactly what I will do. Okay, subscribe, like, comment, share, and all that good stuff. Make the people that you love as smart as you are by sending them this information. Otherwise, I'm around this week if you have any questions or want to strategize and chat about anything. Okay, take good care. Chat with you soon, and thank you again for all your support.